RoboForex's webinar follow-up analysis from Monday. I'd like to just give you a quick recap of things that were called correctly. Starting with the US dollar, I said look for new highs now. 96.50, 96.70. ECB tomorrow, perhaps the press conference sets up this push to new highs. We are diverging at new highs, non-confirmation, exactly as analyzed and forecasted. But just a quick summation from Monday before we get to the individual breakdowns of the pairs is, first of all, the pound, which we had 3 successful winning trades here. 1, 2, 3, actually the 4th one. And here we were on Monday, right in here. And I said, normally we only date trades. We don't marry anything in the markets. I said, but stay with this one. So from where the recommended sale was at 5.5, you now have 290 pips here. I think we're heading into some support between here and 52, and in front of the BOE, ECB, and even the NFP on Friday red events. I'd now recommend taking at least half off here for 290 pips, 280 pips profit. And if in the next 24 to 48 hours you see the market trading around the 52.20, 51.80 level, you may want to book it. Obviously, there's no divergences on this decline. RSI is confirming this new low, but there is a saying Bernard Baruch made famous: you never go broke taking profits. And we rode this for about a week and a half, 2 weeks. So you have a nice trade here in the pound. It's completely up to your discretion. I think there still could be some more downside. I don't know if I'm going to buy it here at the support level, although I am looking for some type of top to develop at new highs in the dollar up around that 96.5 level or so, 97. So at the minimum, you want to start covering dollar longs. And when you think about it, before I get back to some of the other outside markets, I just also want to call your attention to the Euro-Aussie trade, which was recommended a couple of times from up here, and again at 40 right here this day at 46. And then on Monday we had this bounce, and I said, if you want to stay with it, here we are. I said this was a bounce here, right up here. And I said, if you want to stay with this trade, that you pull your stops down towards the 44.70 level, never got there, 45 level, and here we are at 41.55. So from this recommendation, around 145.80, 146, you have 330 pips. I talked about it heading down to the neckline towards 140. And that was in here. A few separate trades developed in Euro-Aussie. You may want to consider covering half here, and let's see what it does at 40.74. This could end up being a major breakdown, but there could be some type of attempt for it to hold this neckline. I've been talking about this head and shoulders top, and we're approaching the neckline again. Last time down, we got a nice pop here. Here we got a pop, so there could be at least something short-term setting up here. But once we start closing decisively under 140, you're looking at 133 and right in here, 34, 200 week moving average here. So another huge winner. I hope that you were able to ride it. We didn't catch this initial down, but a couple of times we've caught this failing rally, and I said the neckline would be a magnet. Here we are. What I say in instances like this is the trades have manifested. So trades manifested on the short side of pound, short side of Euro-Aussie, long side of the Dixie if you bought it. So we want to protect these profits like they're ours now. Okay, you know why? because now it is our money. Okay. Sometimes what people do is after they have a nice run and a lot of winning trades and a big pop in their account value, they start to get sloppy. I say become more conservative after a good run instead of less conservative after a big run. So that's my advice. It's my hope that the analysis provided you with enough compelling evidence to take advantage of these forecasts and recommendations. Give me a Y if you did. So I know in this business, yes, what you did yesterday is old news. You're only as good as your last trade, your last week, your last quarter. So what I'm saying here is now we need to be alert for a potential, at least short-term top in the dollar index at targets mentioned for the last week or so. And what we want to do is we want to identify pairs that with the dollar making new highs are not making new lows. Right now what comes to mind is the Kiwi and the Aussie well off their lows. Pound still off its lows. So you want to go with the strength should the dollar peak up at that level. Strength right now looks to be the Kiwi and pound dollar. Holding up the best, not making new lows, right? Even though the pound's getting crushed here today, we're still at new lows. Even though the dollar is exploding, the Aussie, not at new lows. The Kiwi, not at new lows. In fact, threatening resistance again. I wouldn't chase it here. But I talked about the Kiwi really having a lot of relative strength, the Aussie as well. Aussie's still sitting quite a bit off the lows. The RBA did not cut rates. And then I also talked about that I thought crude was going to continue to rally, and vis-a-vis here's Canada. So giving you a quick overview and then we'll get back to it. So potential dollar shorting opportunities setting up. Begin to ring the register on your long dollar positions, which included shorts in cable, shorts in Euro Aussie. Give me a Y if you're with me and you understand what I'm saying. Into red events that we have coming here over the next couple days, you can expect everything and anything. And what I would prefer to do, instead of predicting how the market's going to react to the ECB announcement and the press conference, is roulette. It's a red or black bet. So if you're going to stay with something, you stay with it small, you trail your stops. And hold on to this increase in equity that you've experienced if you went with the analysis provided over the last several weeks, or may I even say the last several months. Okay? So we'll get back to the outside markets and we'll come back to the pairs, and here's the dollar index. So this was a confirmed high that we had in the dollar index here. This was confirmed. We're now at new highs. The RSI at the high in the dollar index before we entered this congestion, consolidation, triangle type formation. The RSI up here had a high of 82, which is a pretty high reading. And although we're not at the highs, I don't think yet we're at 67. So well beneath the momentum peak. This was the momentum peak, and now we're reaching new highs without momentum confirming. So at the minimum, it tells you to start paring back on dollar longs, and at the maximum, we start paying attention to the potential of short-term peak in the dollar and some type of correction in the dollar. Give me a Y if you're with my analysis on the dollar, that we are not confirming new highs here. This is a momentum divergence. It's only the first one. So looking for a potential topping action here in the dollar index between 96.5 and 97, most likely in the next 48 hours into the ECB or NFP. And what we want to do is, besides covering our dollar longs and booking profits into these ranges, we want to start being alert to potential reversal candidates that would take advantage of the dollar losing its bid for a little while. Give me a Y if you understand, and that you see the momentum divergence now happening in real time in the dollar. Well, it's right about finally getting some type of sell-off in the S&Ps. And the correlation of a weak dollar and weak S&Ps did not hold here. So this topping pattern still looks likely to me. And we'll see, perhaps we get another shot up here, starting to look like the 3 drive. It extended maybe 10 handles more than I thought it would, but I think it's a dangerous market. Momentum divergence is here. Perhaps if the dollar pops and the yen pops into Friday, we get one more push up. I'd sell into any strength in the S&Ps and consider on your retirement accounts, on your long equity mutual fund positions, etc., to consider buying some insurance and some protection and even raising some cash. I know this doesn't have anything to do with FX, but I know most people who could afford to be speculators in FX also have their conservative holdings for their retirement and their pensions in financial assets outside of the top of the pyramid, the speculative part of their portfolio, trading leveraged instruments such as FX, futures, options. Give me a Y if you're with me on the S&P. Okay, so gold's still not really responding. The fact that the Aussie is not making a new low tempers some of my short-term negative bias in the gold, and we're getting near a dollar top. Still has not done anything right, kind of like Aussie, sideways. It's going to be interesting to see what it does, maybe around 1160, 1170 level, but gold's still doing nothing right. I was bullish at year end, turned negative at the 1300 level for at least taking money off the table. Still don't feel compelled to do anything on the long side here in the gold as of yet, which kind of tempers my constructiveness in the Aussie, but I think there's a possibility that before gold makes new lows and the Aussie makes new lows, if it even does, that there's a chance with the dollar peaking for a recovery in both the gold from lower levels and most likely the Aussie from lower levels, but both of them will not be making new lows. Here's your weekly gold chart. And you can see we're still quite a bit off the lows posted last November, down around 1130 level. So we'll see if gold can dig in its heels and post a higher low, and the Aussie as well. Who understands the correlation between gold and Aussie and how I correlate them? So as gold's been coming down, Aussie's been coming down as well, right? So US dollar yen is something that I correlate with the S&Ps. Aussie USD is something I correlate with the gold market. And USD CAD is what I correlate with the oil market. Let's take a look at the oil here. I was constructive on it Monday, but I actually called the bottom with the divergences there. Let's take a look at crude's action today. I was anticipating an upside breakout, which I thought was going to pressure Canada. What also helps the bear case in Canada was Bank of Canada did not lower rates. They stood pat on the rates. So even though the dollar's stronger, USD CAD has come off. So we're still in this triangle range here, and crude needs to clear this 51, 52 level. To me, it looks like anything can happen, but I'm not looking for new lows right away. So even if there's a break, I still think there's a possibility that these lows hold, and if we could break out of this consolidation pattern, it measures close to $65, $70 down the road, which I think in turn could give us a 121 Canada. Higher crude market is going to give us a lower USD CAD, because CAD I consider a pretty pure petrocurrency. The weakness in Canada, a lot of it has to do with the weakness in the energy sector. Give me Y if you're with me. So weak Canada, USD CAD is how we pair it, means strong USD CAD. So everyone clear on the outside markets? Any questions? Okay, let's get to our individual pairs in more detail. As usual, we always start off with Euro USD. Euro USD on the 1 hour is not confirming, is confirming the low. Trying to confirm it on the 4. Best guess is that we trade 109.60. There's a lot of fib targets, wave counts setting up at 109.60. I've had this return line in here for a while that comes in at 110.30. Perhaps we get some type of throw over here. We're trying to confirm on the hour. So pretty close to a divergence where, just like I think the dollar is going to peak, that implies some type of at least temporary low in the euro. And if you notice at the low down here, this is a classic example of the real simple implicator, which is the RSI. Didn't think that this low was going to hold. We caught some of the strength here. We caught some of the weakness in euro, but the reason as a trader, being aware of what the RSI does when markets make new lows and new highs, this RSI value was 17. That's pretty good downside momentum for the daily. It was a confirmed low, and when you have a confirmed low, the implication is that there'll be another low to follow. So what made it actionable when you look at the daily is knowing that this low is confirmed, you sold a rally. You have to use your other tools for pinpointing entries and getting signals. But this is gold to know this. So anyone who thought we were going to have a bottom in the euro did not recognize the fact that it was a confirmed low. Could we have a bounce in euro? Yes. But is that going to be a major low? Here we go again. I'm going to repeat this. I want you guys to write it down, and this applies to all time frames. Ready? Markets rarely peak or bottom when momentum confirms a new high or a new low. The implication is on a confirmed high or low that perhaps after a correction, another low or high is likely. The implication after confirmed highs and lows are that after a correction, new highs and new lows are likely that may or may not confirm. So what's going on in the euro right here? The shorter time frames are confirming, but what about the euro right here? 28's a better reading than 17, don't you think? And we are making new lows. We cleaned out all the stops. I made a joke over the last few weeks is I've been saying to people, do you think there's at least one sell stop under 110.97? And they cleaned them out here. So anyone that was hoping for a euro bottom is now gone. So that tells me that we're probably getting closer for some type of reaction. I did want to point out, though, that as bearish as the world is on euro, for the first time in quite some time, new low confirmed, new low confirmed, new low confirmed. This is the first time in quite some time that we are not getting confirmation on the daily for a new low. The shorter term confirmations of the low tell us that it's going to have to do some work. But this is something to take notice of, because it's the first time, possibly all the way, except for some reactions here, from 140 to 110, that you're starting to get a daily non-confirmation on the RSI. So at the minimum, that's saying start to be cautious about pressing the short side of euro. Give me a Y if you're with me. And it would be kind of classic, think about it, how successful Draghi has been talking the euro down from last year, almost a year ago, in May, of this total collapse in the euro. And all the way down, they kept saying they have to do QE, they have to do QE, they have to do QE, they're going to do QE, they're going to do QE. So it could turn into a classic sell the rumor of QE to QE finally happening. And in trading, say for example in stocks, they say things like buy the rumor, sell the fact. So, you know, if an equity, they're expecting a beat on earnings, and they get the beat in earnings, and the market pops on that, that's called buying the rumor. And then once it becomes fact, sometimes that's the end of the move, at least short term. So perhaps terminal move here. I don't think we're going right to parity. And it's not just an opinion, it's what I'm seeing technically on the daily dollar index in euro. So if you're going to try and bottom pick this, some levels to pay attention to, see what happens around the 109.60 level, or wait for price action to reverse, and perhaps we get a rally and a new low. This 1 hour confirmation tells me I don't think this is it. What we want to do is we want to see the RSI bounce, and on a new low on the hourly stay above 30. So that'll even be more important than price. It'll be what the momentum readings are when and if we head towards those levels sub 110. Give me a Y if you're with me. Moving over to the pound. Classic 3 drives to a top, talked about it. We had several good trades off this wedge line. 1, 2, 3. All of these I said were trades. And was always looking for one more push to new highs because of some confirmed highs that we had. And it's on the record. When we were here, I said, don't worry if you missed this, or if you missed this, or if you missed this, that there was going to be one more opportunity. I was looking for one more pop when we were here to take out this high. Talked about the wedge line, 550 to 570. The high of the move was 551. I'll try and be more accurate this time. Then I said, you know, here we were Monday, you know, should I get out? I felt there was more left. Told you to stay with it. You should have at least 280 pips left. The 152 level may turn out to be support. I had some kind of wedge line here at 52. That's also going to be about 51.80. 52 is 61.8 back of this. So you see, euro's making new lows, pound way off the lows. So what's your preferred long? Even though I think they both could turn. Forget about your opinion, just look at the charts and tell me what you see. Here's the daily in pound. At 52.60, we're still 300 pips off the low. Euro daily making new lows. I'm not saying they're not going to turn the EG when the euro bottoms for this reaction, but your preferred long, just classic textbook relative strength readings is you want to buy the market not making a new low instead of buying the market making a new low. Even though at times I do both. But give me a while to understand that. I know it's simple, but you overlook those things. People overlook the simple things. You want to buy markets making higher lows. You want to sell markets making lower highs. And that CR3 is a better wave to be participating in because it's normally a fib extension of 1 or A. So, for example, in the pound, should we dig in our heels and put in some type of higher low at some fib levels? You can expect equality minimum. Okay, so this was a pretty good rally, about 600 pips, right? So say we bottom at 51. Then there's an opportunity for equality up around 157. I will say if we start closing much under the 160 level, then new lows and 149 is possible again. But just wanted to give you the instruction. We're making money on this decline, telling people to book it, tighten up stops, and consider taking in more around this 52.20, 51.80 level if offered. And tighten up your stops if you want to stay into red numbers. Tighten them up pretty good. The pound I don't think should trade above 375. So really you have to risk quite a lot just to get another 50 pips maybe. So, you know, I'm a believer that it's usually not worth it trying to squeeze out the last few drops of juice from the orange or the lemon. We're not going to be there from the high to the low. We're just trying to capture a portion of that move and get the meat of it. Give me a Y if you're with me. Moving on to the yen, I've been sanguine about it. You know, we keep testing these lows. It keeps testing the breakout out of this triangle. It's acting okay. I wouldn't touch the yen until after the NFP. And when I look at some of the momentum indicators, if the dollar is going to come off, then the yen should be putting in some type of top. I know a lot of people are looking for 125, but I don't know. It's taken a lot of patience. I'm going to be looking at it possibly at 2060. I'd like to see these highs being taken out because it confirmed. What kind of high is this in the end? At 76, that's a confirmed high on the 4-hour. So we should get one more push up there. Diverged from up here on the 1-hour, but not the 4. So let's see what happens. I'm going to cue the yen off the dollar index trading 96.50. Want to see where the yen's at. It'll actually be more bearish if we don't take out this high when the dollar's peaking. So leaning towards looking for reasons to for shorts, because if the dollar's making a new high, and the dollar's been making higher highs for quite some time, and if you take a kind of a longer term perspective, the high in the yen was back in December. We haven't made new highs for quite some time, and we're up against some major resistance here. So perhaps a short setting up here over 20, possibly not taking out these highs is possible too. So key, look at the yen when the dollar index is trading up around my targets, and if it's showing relative weakness, it could be a decent candidate for some type of correction back to the downside. Euro yen, I talked about the descending triangle, talked about shorting euro yen on this rally here. Okay, this was a descending triangle. It measures 30, 50. This was it. The 300-point formation. It's confirming the new low on the 4-hour. So basically you have a 300-point range, measures 30, 50, which will be a higher low. That doesn't even mean new lows here. So 30, 50 was the target off that formation. Again, if you got short when I was talking about looking for new lows, you have nice pips made. Go to the bank and tighten stops. Euro pound. I said this may have been the only clunker, but you shouldn't have lost money. On Monday I said buy an ABC pullback to 72.60. The low was 72.58. It popped for about 35 pips. Maybe you took partial profits and then pulled your stop to break even. You're out. I'm not in a hurry right now to buy it. This should be the first thing to turn. I guess I was looking for it to not make a new low while Euro made a new low. May have just been a stop hunt under the low. And the 4-hour is diverging. So leaning, I want to see where EG is at, and if we're getting some short-term divergence above 30, I may probe the long side there. And just a quick update on another home run ball in Euro Aussie from 46. You have 450 pips. You may want to cover up the rest on a test of this neckline, and I am looking for a breakdown eventually. Any questions on anything I've covered today? Remember these red days, there are a lot of air pockets. Nothing wrong with being flat and reacting to the reaction. I've given you some levels to pay attention to on the upside in the dollar index, the downside on things like Euro, Aussie, Canada. Yeah, let me just wrap it up with Canada. I talked about it briefly. So if the dollar is going to come off, Canada can't even act good with the dollar being strong. What happens if crude breaks out and the dollar weakens? To me, it looks highly probable we're going to get this breakdown in Canada and measures back down towards this 120, 121 level in the weeks ahead. And with that, I'm going to wish everyone good hunting. Thank you for your attention. Don't just count your pips, count your blessings. And look forward to seeing you next week. Thank you for your attention. It's good trading, everyone.